Institutional wallets have been quietly accumulating SUI for months, and almost nobody in retail has noticed yet. That's not a headline I'm throwing out to get your attention. The on-chain data backs it up. Large wallet addresses holding between 1 million and 10 million SUI tokens have been growing steadily through 2026, even as the price has drifted sideways to slightly down. That kind of accumulation pattern, quiet, methodical, happening during low-volume periods, is a signature move. It's the same playbook smart money ran on Solana before it broke out. It's the same thing they did with Ethereum before institutions started openly talking about it. And right now at 683, it's happening with SUI. So the question isn't really whether SUI has potential. The question is whether you're going to find out about this before or after the price already moved. Let's start with what SUI actually is, because if you don't understand the technology, you can't understand why big money cares about it. SUI is a layer 1 blockchain, meaning it's a base layer network not built on top of Ethereum or Solana, standing on its own infrastructure. It was built by Miston Labs, a team that came directly out of Meta's failed Diem project. These are not hobbyists. These are engineers who spent years building one of the most ambitious blockchain attempts in history, took those lessons, and started fresh. Here's the thing that makes SUI technically different from almost every other layer 1 you've heard of. Most blockchains process transactions in sequence, one after another, like a single checkout lane at a grocery store. When traffic spikes, everyone waits. SUI's architecture processes independent transactions in parallel. Think of it like opening 20 checkout lanes simultaneously. That's why SUI can handle throughput levels that would cause Ethereum to choke and would stress even Solana during peak load. And in a world where institutions are starting to move real capital on-chain, tokenized assets, settlement layers, high-frequency DeFi, throughput isn't a nice-to-have. It's the whole game. SUI also writes smart contracts in a language called Move, which was specifically designed to eliminate the most common attack vectors that have cost DeFi protocols billions of dollars over the years. Institutions doing due diligence on blockchain infrastructure care about that. A lot. If this breakdown is helping you understand what's actually happening here, subscribe to Crypto Sayans. We break down moves like this before they go mainstream. Now let's talk about the opportunity, because this is where it gets real. SUI's current market cap sits around $4 billion at today's price of $683. For context, Solana's market cap when it was at a similar early institutional interest stage was under $5 billion. Today, Solana is worth over $90 billion. I'm not saying SUI becomes Solana. That's not a prediction. That's a comparison to calibrate what's even possible when institutional infrastructure gets built around a high-performance layer 1. What we're seeing in 2026 specifically is the beginning of ETF conversation around altcoins beyond Ethereum. With Bitcoin spot ETFs now normalized and Ethereum ETFs operating, asset managers are actively researching which layer 1 assets are structurally sound enough to package for institutional clients. SUI's combination of technical credibility, a VC-backed founding team, and genuine throughput advantages puts it in a shortlist that most retail investors haven't even heard discussed yet. The realistic price scenario for SUI through the end of 2026 and into 2027 hinges on two things. First, whether total crypto market cap continues its expansion. If Bitcoin holds above 80,000 and altcoin capital rotates, SUI's current rank of 32 means there is significant room to move up the cap table, which historically pulls price. Second, whether any major ETF filing or institutional product announcement names SUI specifically. A single SEC filing from a firm like BlackRock or Fidelity mentioning SUI as a constituent asset would be a different kind of catalyst than anything organic. A conservative target in a continued bull environment is somewhere in the $2 to $3 range by mid-2027. An aggressive target, if institutional adoption accelerates and the ETF narrative hits, is $5 or higher. Neither is guaranteed. Both are grounded in the current market structure. Now the part most YouTube channels skip because they want you to just buy. Let's talk about what goes wrong. The bear case on SUI is real, and you need to sit with it. First, SUI is still ranked 32nd. That means liquidity is thinner than top 10 assets. In a risk-off environment, if macro conditions deteriorate or Bitcoin corrects hard, lower cap assets get sold first and fastest. SUI would not be immune to that. You could see 50% drawdowns within weeks if sentiment shifts. Second, the competition is brutal. Solana has first-mover advantage with institutional partnerships already secured. Ethereum still dominates DeFi TVL by a wide margin. SUI has to earn market share from ecosystems that are already entrenched. That takes time, and time in crypto is not cheap. Third, the Move language ecosystem, while technically impressive, is still small. Developer adoption is the oxygen of any blockchain. If SUI can't meaningfully grow its developer and application layer in the next 12 to 18 months, the institutional interest will fade because there won't be enough product to attract end users. And fourth, and I want to be direct about this, the current price action is not exciting. A coin that's down 1.5% on the week, while the broader market shows mixed signals, is not a momentum trade. If you need immediate price action to stay interested, SUI right now is probably not your play. So, here's my honest take. SUI at 683 is an asymmetric bet on institutional infrastructure adoption. If you have a 12 to 24-month time horizon, a genuine risk tolerance for high volatility, and you're already diversified into Bitcoin and Ethereum as your core holdings, then a small allocation to SUI, emphasis on small, 5 to 10% of your crypto portfolio, makes sense as an early positioning play. You're not chasing price here. You're positioning ahead of a narrative that has not gone mainstream yet. If your timeline is 3 to 6 months, or if you need this money to work in the near term, look elsewhere. The catalysts that would move SUI significantly are not happening tomorrow morning. The smart money is in. Now it's just a question of whether you're patient enough to sit with them while retail catches up. Subscribe to Crypto Seance. We break down the top coins every week, so you never miss a move like this before it goes mainstream. Hit the bell so you're the first to know.